Welcome back. Shares of AtkinsRéalis have moved higher today. There's the stock up 12.5% on the day so far. This comes after the company reported better than expected first quarter results and also raised its guidance for its important nuclear business. For more on this, let's bring in an expert on the stock. He's Ian Gillies, an industrial analyst at Stifel Nicolaus Canada, and he joins us from right here in Toronto. Ian, thanks a lot for joining us. Why don't we start with the performance in the nuclear business for GE? There's a lot of talk about the nuclear business globally these days for reasons that are easy to understand. This company is a specialist. It has a special unit of its engineering business devoted to that business. How did it perform in the quarter?
Yeah, so nuclear had a very, very strong quarter given some of the strong backdrop for that specific sector. On a revenue basis, it came in at nearly $540 million. We were looking for roughly 300 in the quarter, so that was obviously very good. And as well, EBIT came in significantly stronger than our expectations. But we think more importantly, the backlog for the business came in at $5.2 billion. If you look back to nearly 3 years ago, that backlog would have only been about $1 billion, and it was up nearly $2 billion from the end of the last quarter. And we think there's more great stuff to come in nuclear. So it was a very, very encouraging sign for the company's nuclear business. What
do you expect in the future? As I noted, we hear regularly now about more nuclear plants being built around the world, the increasing popularity of small nuclear reactors, the small modulars.
So they've increased their long-term goal for nuclear revenue in 2027 by 23% with this update. What we find encouraging is that the bulk of the business right now is tied to refurbishment of existing reactors. And there's very good potential that we'll get some new build reactors announced over the next number of years. In Ontario specifically, there's expansions being considered at an existing site called Bruce Power. There's an existing site being considered in a place called Port Hope. And as well, there's another one being considered in northern Alberta in a place called Peace River. So there's a lot of irons in the fire, and really just one of these announcements and Atkins winning it will make a material difference to the company.
You've mentioned the backlog, and I'm sure that's something you follow very closely as an analyst. How reliably can backlog figures be translated into future revenue and profit numbers?
Typically, it's quite a high conversion rate. The company would have something different in a number they don't report called a soft backlog. So we would anticipate everything in backlog does get converted into revenue.
Okay, what are your thoughts on the stock itself? You have a buy rating and a price target of 90 some, I believe, dollars. Let me get that, 96 Canadian dollars per share. Why the buy, and how do you get to that price target?
Yeah, so starting with the price target, we're at $96 right now. Paul, you have a remarkable canny for getting me in between model updates, so that is under review, and we'll take another look at that. And I would point out in one of our recent reports from February, we did lay out a path for the stock to get all the way up to $125 a share in 3 years' time. So we still think there's a lot of running room here. As for how we set the target price, we use a sum of parts methodology. Because engineering businesses and nuclear businesses get valued very differently, with nuclear businesses garnering quite high multiples and engineering businesses also garnering very high multiples, but not quite as good. So that's how we get there. But clearly, higher numbers is a good thing.
You like the way the management team is executing. Obviously, the company going back quite a few years now had a very checkered history. That's all in the past now. You must like the way current management is executing.
Yeah, it's been, quite frankly, excellent from our perspective since 2019, 2020. A lot of the issues in the business have been cleaned out to date. Where we find ourselves very encouraged is that companies like Atkins tend to do a very good job acquiring other businesses. This company in particular is just at the beginning of starting that as their journey. And given the strength of their balance sheet, we think there's a lot of leg room for them to use acquisitions to augment the strong organic growth that the business has.
Ian, thank you very much for this conversation on AtkinsRéalis, one of the big movers in the market today here in Canada. Ian Gillies is an industrial analyst at Stifel Nicolaus, and he joined us from right here in Toronto. Coming up.